Okay, in this video, I'm going to teach you how to use rental growth to predict what will be the next boom areas and the next boom suburbs. I'm going to share with you like 7 charts, one after another, as a bit of a tutorial about what's going on with the world, the economy, and how to find these areas that are going to do really well, but both from a rental and capital growth perspective. In this environment, possible? Stick around. My name's PK and I help people build passive income through the Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. This channel helps you understand the economy, property, and financial happiness. Give it a thumbs up, give it a like, give it a subscribe, and turn that notification bell on. Love that bell. Let's go. Okay, so the first thing I want you to understand is there is jack all rental vacancies in Australia. Everyone always shows you rental vacancy numbers like according to percentages, but here's like the hard data, okay? Hard data. And this is from realestate.com. Okay, New South Wales, 18,000 vacancies. So you might think, oh, that's a lot of vacancies. That's for the whole state, like literally like millions of properties in New South Wales. Victoria, similarly, millions of properties, less properties vacant. Queensland is like almost nothing. In more than 1 million properties in Queensland, there's less than 8,000 that are vacant. South Australia is tiny, WA is tiny, Tassie almost doesn't exist. Northern Territory and ACT are also at record lows. We have a chronic rental issue. There's almost nothing for rent in the areas where people want to rent. But you already knew that, right? Well, what you might not have known is the areas that have the most chronic rental vacancies. Here they are from Jeremy Shepherd. Queensland, Bundaberg, Queensland, Gold Coast, Busselton and WA, Tamworth. Like, these aren't like, just automatically mining towns or places and whoop whoop. I can tell you we've bought a lot of properties actually in all of these areas over the last 1 or 2 years. It's dispersed, not just in Queensland, but Queensland is the key theme. Tweed, there's units and houses that are so rare. Wagga, Bunbury, Toowoomba. So these have chronic vacancy issues. What does this mean? Well, what it has meant so far is that so many of these areas, the rents have gone up more than 20%. In some instances, almost up to 30 or even 40%, literally just in the last 1 or 2 years. That has meant that, yes, interest rates have gone up, but if you had bought well, like, yes, your repayments have gone up because interest rates have gone up, but your rents have matched it. So your cash flows are pretty much okay. You can see here some of these areas that I'd mentioned, the rental growth last year alone had been like 25%. Now, these aren't even all of them. And over the last 2 years, some of these numbers are closer to 30 or 40%. And so you're probably thinking, well, okay, I get that, PK, but interest rates are going to keep on going up. And I don't think rents can really keep going up at this rate. Affordability at some point will provide a cap on how much rents will go up. Well, first of all, I love this meme, which kind of indicated that, yeah, interest rates are still going up. You can read it yourself, and it's kind of funny. It's US based. If you don't get it, well, not sure what to do, but it's kind of factual. But what I also want to share with you, and I've shared with you before in other videos as well, is how inflation overseas, leading indicators of inflation are actually tapering down. Like, this is Euro gas prices, European gas prices. And, of course, these take 6 months, almost 12 months sometimes to reflect in real inflation numbers. But over the last year, they've been going up, 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 up. I think the war started somewhere around here from memory, this kind of spike area. But check this out, they've finally gone down. Now, I don't know if they're going to continue going down, but if this trend continues, then inflation may be a thing of the past in 6 or 12 months from now. But inflation is a hard thing to try to predict. So coming back to the theme of this video, how can we use rental growth to predict which suburbs will boom? Now, look at this. This is from CoreLogic and ANU in Canberra. Portion of income required to service new rents in Brisbane. The first point that I want to make is that, everyone goes on about how, hey, rents have gone up so much, it's so unaffordable, blah, 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 blah. And look, empathize for those who are struggling a little bit, but with a bit of, context beyond the myopic view of just the last year where rents have skyrocketed, like I demonstrated, right? Over the last more than 10 years, 14 years, all the way back to 2008, in terms of affordability, we're just right back to where we were. Okay, for renters, it's costing them about 29% of their household income to service their apartment or house or whatever you call it. So with the aid or benefit of hindsight in time, we know that these current rental levels are completely affordable on an aggregate. There's always outliers and people who are struggling, right? I get that. But on an aggregate, it's completely affordable. And research globally suggests that this has a little bit of room to move. It can kind of go up to 35, maybe even 40% if you look at countries like Scandinavia and other European countries which are actually very well off and have a very high proportion of their society population renting. But of course, it can't go on forever. So what happens next? What happens when a tenant has reached their 35 or maybe even 40% threshold? They're like tearing their hair out. I can't afford these rents. I got to do something. In the climate, in the backdrop tapestry of falling house prices, like in Brisbane, most places are falling in value. What does a tenant decide to do? They decide to say, look, it's actually going to be cheaper to buy my first home as opposed to continue renting. And bam, that is the secret sauce. Whenever that threshold occurs, that is when prices in that area start to increase. Now, they don't automatically increase, but they do increase if this exists. This is from the Housing Industry Association right here in Australia. This is their forecast as of August. This lighter kind of teal color, I think, this kind of greenish color here, that is their forecast for detached houses. And what you can see is that they are forecasting that less and less on a rate basis, new homes will be built over the next 1, 2, 3 years, etc. Why is that? Well, it's pretty obvious. Building costs have gone through the roof. And just on the side note, over the long term, house prices structurally find their level at the building cost level. So right now, yes, house prices are going down in many areas. Over the long term, they find their level. Water finds its level, right? House prices in Australia find its level based on the structural marginal cost to build a new house. So as these construction costs get larger and larger, it puts a floor on long-term structural house prices. That was an aside, right? A little bit of economics one-on-one. But what I'm suggesting here is that, let's say in the Brisbane context, renters, they can't, afford their rent anymore. They now want to buy a house to live because it's easier or cheaper to buy than rent. There's not really many new houses being built, as this line suggests. So they have to choose from the existing established dwellings. And bang, that is when demand starts to supersede supply once again in the secondary established housing market, detached housing market, and prices rise. So what smart investors have done, like I showed you earlier, they've already got that 30-40% rental growth over the last 2 years, or maybe next 1 year as well. Then those same booming rental areas, suburbs, they convert into strong capital growth booming areas. So you've got that passive income story insulated against the rate rises, and we know the rate rises will mellow out in the next 12 months, and therefore inflation, all that will be history soon, right? You've got that passive income to offset those rate rises, the higher mortgage repayments. You're able to hold your home, and you've perfectly timed the next capital growth cycle in specific suburbs. Now, this doesn't happen everywhere and just anywhere. It requires the right ingredients. Like when you bake a cake, you got to measure things out, right? My wife always says, follow the recipe. I just kind of chuck stuff in and have it works. You got to follow the recipe. And when these ingredients, when these elements line up, you get your passive income, you get your capital growth, and happy days. So that was a quick 101, right? Like 6 or 7 charts, both micro, macro, taking you through how investors who are more sophisticated start investing or build their portfolios in this current kind of really weird and crazy and uncertain, macro environment. Remember, the micro environment is how we make money regardless of the macro environment, because we can just buy one house on one street in one suburb in one town. We can't buy Australian housing, and that is where the arbitrage opportunity exists. Guys, the 6 inches between your two ears are the most important real estate you'll ever own. Thank you for watching this. Smash the subscribe button, turn notification bell on, give it a like, and I'll leave links below if you really want to level up to my podcast on Spotify and Apple, Google Podcasts. Same name as my YouTube channel, and also my Facebook group with 25,000 amazing community members. Same name as my YouTube channel. Links are below. My name's PK, and hopefully that gave you value. Catch you later. Deductive logic. Catch you later. Bye.